ZKSync is rallying massively. The question is why? Who's buying here? Who's selling here? What kind of news are driving this rally? Let's have a look at the on-chain data, the data most people are not considering. Let's try to figure out whether it still makes sense to buy the ZK token. We are currently at 4.8 cents. We are up 67%, but I'm not a fan of US dollar charts. Because there's so much correlation within crypto, it's better to compare one altcoin with the rest of the market. How is ZKSync doing relative to Bitcoin, relative to the entire altcoin market cap? And that is shown over here. Now this chart starts in June of last year. And before this recent pump, we went down by 89% relative to the others market cap. So how did ZKSync perform relative to all other altcoins? Let's first discuss what happened prior to this pump. Why did ZKSync perform so poorly most of the time? Prices get determined by the intersection of demand and supply, and usually the demand doesn't fall that permanently over time. It's rather the supply that tends to grow that depresses a price in this manner. And that is also true for ZKSync. ZKSync has an expanding supply, and the demand didn't grow at the same rate. The project launched with 3.6 billion tokens, and it will grow all the way to 20 billion tokens over the next 3 years. So this is simply vesting unlocks by the investors. The investors are constantly selling off ZK tokens. And here are those investors. We've got Decrypt Capital, we've got Dragonfly, Union Square Ventures, Andreessen Horowitz is part of the funding as well. And so over several rounds, we have seen millions and even tens of millions and even hundreds of millions getting raised for ZKSync. And of course, those investors want to get their money back, plus some profit. That is why we've got those constant unlocks. And that is what's depressing the price long term. That doesn't answer the question though. Why is ZKSync suddenly up versus the rest of the market? We've got the Atlas upgrade that went live yesterday, and we've got Vitalik Buterin tweeting about this, showing his support. There's also a narrative developing around the real-world asset space, as in the tokenization of private debt. But my impression is that this is still mainly a story, not so much real adoption just yet. Have a look at the following metrics. This is ZKSync's total value locked over time in US dollars. The trend isn't that great. Measured in ZKSync tokens, we do see a bit of a rally, but again, highly volatile, again, not that convincing. Here's the stablecoin market cap over time on the blockchain or on that layer 2. Here we've got the chain fees, which are of course very low, considering the continuous upgrades. Here we've got the decentralized exchange volume, and that's one of the things I do not like. Because whenever we look at a price rally and we consider, should we buy into this positive momentum, we have to ask ourselves, how sustainable is that momentum? Now, the usage of ZKSync is very much down. Very little trading activity on decentralized exchanges, also not that much on the perpetual futures. The app fees over time aren't growing either. There's no spike in the bridged total value locked, and there's no increase in net inflows either. So really, this rally, it seems to be hype that's developing out of the technical upgrade. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. Just compare the numbers. In the last 24 hours, we only saw 6.4 million worth of trading volume on ZKSync. That is nothing. Arbitrum had 161 million. Polygon had 72 million. And of course, the big layer 2s, they even go into the billions of trading volume. Base, for example, 1.1 billion. And the Ethereum chain itself had 6.2 billion. And so most trading volume actually does not happen on the spot market anymore. A lot of the price discovery now happens just with the bets on the price via the perpetual futures, the levered bets that allow to get in and out of the token very quickly. In the last 24 hours, we only saw 99 million worth of trading volume on the spot market. But compare this with the perpetual futures market. Here we had 548 million, more than 5 times the trading volume of the spot market. So really, it's the perps that move the price, and then some arbitrage bots do similar transactions to balance out the pricing on the spot market. And so let's have a look at the perpetual futures. Here's the funding rate over time. It crashed on the 10th of October and it crashed recently with the rally to very similar degrees. Now you might remember the 10th of October, this was when the flash crash wiped out the longs for many perpetual futures. ZKSync fell by 93%, much more than the average altcoin, which only fell by 47%. On the 10th of October, we saw 6.5 million of long liquidations. Now the funding rate fell to a similar degree, but the total number of liquidations is much less, because this time it's the shorts that get liquidated, and most of the time there are more longs than shorts. That's why the funding rate is positive. That's true for the vast majority of times. It's also true for the vast majority of assets. The amount of open interest on ZKSync crashed massively from 42 million down to 20 million. So all the longs got liquidated on the 10th of October. And since then, we haven't seen open interest spike up anymore. The trading volume stays low. And so I do think there's a good case to be made that this long-term trend will actually prevail. We're not seeing a real breakout. We simply see a short squeeze. Some people bet on falling prices of ZKSync because of this trend. The market makers picked up the pieces they bought during that flash crash. And now they're simply liquidating the other side of retail that's still short on ZKSync. But once enough short positions have been liquidated, and once the funding rate normalizes again, then we're likely going to continue to see the price go down, because the investors have to cash out all of those hundreds of millions that they put into the project years ago. Now there's always the risk of a secondary squeeze. Right, this is a first short squeeze. We saw another rally, a retraction, another short squeeze. So it's better to wait for a while until attention dies down. And then after 2 or 3 days, once we have stabilized, we're likely not going to see another squeeze. And then we can still enter a short. Maybe not at the currently elevated prices, but at that point, right, in a few days, the risk of another rally is much smaller. And most of those short squeezes tend to deflate in the not so distant future. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much faster compared to the movements to the downside. We shoot up, and then over a long time, we trickle down. Here's the example of Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up. This was the announcement of the dinner. And then subsequently, we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc., that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just so stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now, this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those 2 videos, you join the community. Afterwards, I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position, and if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.